Bismillahirrahmanirrahim. Assalamu alaikum, dear students. Students, how are you? Students, today our topic is cost accounting, in which we have problem about financial statement, in which we have a problem which is in front of you on screen. Let's start this problem to solve. Firstly, we have to read this problem and explains what are the requirements in which. Let's go on screen. This is the 5.26 problem which is taken from the book of Professor Sohail Afzal. The students, this problem is saying that share price and income statement. Mobile Manufacturing Company Limited is working on feasibility to introduce a new product in market. From the data given below, calculate estimated sales price per unit of the product and prepare an estimated income statement for the product. Dear students, in this problem, estimated annual sales, which is in the form of units, are given, which are 24,000 units. Estimated cost, direct material cost is given, as well as it is per unit cost is also given. Direct labor cost, factory overhead, administrative expenses. But in these expenses, the marketing expenses is not given, but this is given in the form of percentage form. Marketing expenses are estimated as 12% of sales. The company wants to earn net profit of rupees 6.50 per unit. Dear students, firstly we have to find out the unit sale price. For this, we have to move other slide, in which in these problems we have to find out firstly estimated sales per unit of the product, and secondly the other requirement is prepare the estimated income statement for the product. Everything has been given, but marketing expenses are given in the form of 12% of sales. The students, per unit sales price of product is the combination of direct material cost, direct labor cost, factory overhead, administrative expenses, marketing expenses, and net profit. For this we have to assume that per unit sales price is X. For this we have to assume here, let X be the per unit sale price. Now the per unit sale price is the combination of estimated cost, which is given in problem, which is given in problem. Here, debt related cost, debt labor cost, factory overhead cost, administrative expenses, which are per unit is 15.15 per unit cost. But in given expenses, the marketing expenses is not available, which is 12% of sale. Then we move again here. Per unit sale price is estimated cost, which is given in problem, but plus marketing expenses plus net profit. Net profit is also given in problem, which is per unit is 6.50 per unit as a net profit. Students, now X is assumed as a per unit sale price. Rupees 15.50 is the estimated cost which is given in problem here. Now market expenses is in the form of percentage of sale. Then we have to write here 12% of sales plus per unit net profit is also given in the form of rupees 6.50. Now students, here X is equal to this amount and we have to convert market expenses in the form of X 0.12x because X belongs to sales and 12% of X mean 0.12x is the market expenses plus net profit. Students, we have to add up both the values, this and this, 15.50 plus 6.50, this is the 22, and transfer this value on the other side as a minus form, x minus 0.12x. Now when we deduct x minus 0.12x, then we have to take 0.88x is equal to 22. Now this value will be transferred to the other side as a division form. Then this is the final value is x is equal to rupees 25. This is the sale price per unit is 25 rupees. Now with the help of this price we can find out the estimated annual sales. Now we can find out the estimated annual sales of the products easily. Estimated annual sale is equal to 24,000 is given in the problem as a units for sale, which will be multiplied by per unit sale price 24,000 units at the rate of rupees 25 each unit, which is the amount is 6 lakh rupees. This is the 6 lakh rupees is the amount. Now marketing expenses is also given in the form of percentage form, which is 12% of sales. So then we take 12% of sale, which is the amount is 72,000 rupees. Students, now in these problems we have to also find the cost of goods sold amount, which is direct material cost plus direct labor cost plus factory overhead cost, which is 3,60,000 rupees is the cost of goods sold. Now dear students, let's move to income statements pro forma, which is here. Now we have a proper pro forma as an income statement in which Mobeen Manufacturing Company Limited income statement for the years ended December dash. This is the title bar of this problem. The company name is Mobeen Manufacturing Company Limited. Now sales value is 24,000 units at the rate of rupees 25 each. Now we will find here the sale price multiplied by 25. This is the 6 lakh rupees is the sale price. Now the material cost is given also in the form, direct material cost is given also in the form of direct material cost, which is the 1,80,000 1,80,000 rupees, same as direct labor cost is 102,000 rupees. After that, the factory overhead cost is 78,000 rupees. 78,000 rupees. This is the our value as a cost of goods sold, 3,60,000 rupees. Now we deduct 6 lakhs from this amount. Then we have to find. Then we will find gross profit, which is 2,40,000 rupees. Now admin expenses, marketing expenses is 72,000 rupees, which are find out in additional competition. Here 72,000 rupees, 12% of sales. Now the admin expense is given in problem, which is 12,000 rupees here. Then we have to put this amount in income statement pro forma, 12,000 rupees. So dear student, the both expenditure is equal to 84,000 rupees. Then we deduct 2,40,000 rupees in 84,000. Then we have to take net operating income, which is 1,56,000 rupees is the net operating income. Dear student, this is our second requirement to find the net income before income tax. Dear student, this is our problem which we have found. I think you clear and understand this problem. If you understand this problem, please like my channel and subscribe it. If any problem is faced by you, please contact me at my comments box. Thanks.